Our property markets are finishing 2021 on a record high, record number of sales, record number of auctions, transaction dollar values. So what's ahead for 2022? That's one of the things we're going to talk about in this week's Property Insider video. If you want to keep up to date with what's happening, please subscribe to our YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Our housing markets are finishing the year experiencing elevated demand, which has resulted in higher volumes of property for sale and a record number of properties put to auction over the weekend, a record number of properties sold in Melbourne and Sydney, record transaction numbers, record dollar value sales. And while there are still many active buyers, for the first time since the pandemic began, they're spoiled for choice, yet the balance is still in favour of the vendors, with properties selling quickly. But clearly, price growth has started to slow. Now, there's only 2 weeks left in the selling season this year, and as usual, the next few months are going to be highly seasonal. So it's going to be interesting to see how our property markets transition into 2022. While there are some signs that the heat's slowing coming out of the property market, I'm interested to get the thoughts of Dr. Andrew Wilson, Chief Economist of My Housing Market, on what some of the recent news and statistics show. So I look forward to hearing his thoughts in this week's Property Insider Chat. Hi, Andrew.
Hello, Michael. And we are fast approaching, I guess you'd say, the silly season where we can finally relax and not focus as much on our property markets. It'll be a relief because it really has been the year that was this year. And by gee, we've had an amazing finish to the year, almost a finish to the year at the weekend, and just spectacular results.
It was. Well, we'll get on to the auction results in a moment. But last week, the Reserve Bank had its last meeting for the year. In fact, its last meeting for a couple of months. And I think it gave some disappointment to those high interest rate spruikers who didn't hear what they were expecting to hear.
Well, it's really continued to reiterate its position, hasn't it, the Reserve Bank, over recent months. Certainly in the November meeting, the minutes were quite clear when we read them that it felt that still they wouldn't be considering higher interest rates until 2024. Again, they've reiterated that in the December meeting. We haven't got the full minutes out yet for the December meeting, but certainly the statement was clear again, if even more dogmatic in regard to the proposition that they believe interest rates won't increase until 2024. They believe that inflation won't reach the target zone until 2023. And then they said that they have to see a consolidation, a tightening of the labour market to be able to generate the wages increase required for that 2 to 3% band to be met. But I think the most important thing that the Reserve Bank have added to their narrative this month compared to last month is they clearly said that they are now prepared to be patient until they reach that particular goal of consistent increases in incomes within the target range and looking for that what would be a full employment labour market. And that's why they're saying quite clearly that they don't believe that's going to happen until 2024 because the levels at the moment just aren't there.
Well, I think we all have to be patient, but the economy isn't being patient. It's rebounding, Andrew. The recent Delta lockdowns are now behind us and we're getting a robust recovery. So businesses are starting to advertise again. Job ads are up. ANZ Bank tracks them and they say they were up 7.4% on November to a 13-year high. Seek tracks them and are suggesting that they're similarly at a high. But you've noticed some anomalies in these job figures.
Of course, we do typically have higher levels of employment through the pre-Christmas period in terms of retail sales. Retail sales data in October, the bounce back compared to November last year, I know it's a different month, was actually lower, but November was the month last year that we got the rebound in retails after the lockdowns in Melbourne. So we need to still watch out for the November retail sales data just to see if it can hold that rebound energy going forward. But I'm certainly not pessimistic about the prospects for the Australian economy. I think that there's been a little overselling about how quickly we're going to reach that full employment level, which I think will be really, well, I think we're going to have something with a 3 or even a 2 in front of it in terms of the unemployment rate, Michael, to get to that point where we are generating incomes growth. And even then, because of structural changes in the economy and other factors, it's not necessary that we will get that incomes growth, even with full employment. We do have the migration surge coming in that will offer more competition for those looking for jobs. We've lost a lot of jobs over the last 3 months as a result of lockdowns. We have to find those jobs again. And of course, we've also seen a sharp decline in the participation rate as the workforce has declined. Now, those workers who have been discouraged and left the workforce will certainly come back quickly. We saw that last year in our shutdown rebound. But we have to be able to find the jobs to satisfy those that come back into the workforce. So there's still some work to do, Michael. And I don't think we're completely out of the woods in terms of our issues with COVID, unfortunately, but it's certainly a lot better than we've had prior. I think confidence is now a lot more secure in the outlook than it has been because we now have this living with COVID environment.
Now, turning to the property markets, boy, have they been booming over the last couple of weeks, finishing off the year on a high. Now, while property markets are booming, I don't mean that the prices are at the high record growth that they were before, but the transaction numbers have been strong. Private sales and auctions. In fact, it was a record number of auctions over the weekend, wasn't it?
A remarkable weekend, Michael. Second last week of auction activity. We've only got 2 weeks, less than 2 weeks till Christmas. One more week of auctions. I certainly won't get the sort of numbers next week. But we've got to understand what's been happening here. We had a record number of auctions conducted on any day in both Sydney and Melbourne on the weekend. Very high numbers in the other capital cities as well. Considering the absolute flood of auctions, I think there were some great results there because we certainly had clearance rates falling in Sydney down to the lowest results since September last year. But given the just flood of listings, that's no surprise. The clearance rate fell, but remarkably, the clearance rate in Melbourne actually increased. We had the highest Melbourne day for auctions in its history, and yet we had a higher clearance rate than the weekend before. So it's still plenty of buyer depth, given that unprecedented choice that buyers have had. And towards the end of the year, Michael, buyers tend to take a bit more of a circumspect attitude towards transactions. Sellers are more motivated, of course, because they want to sell before the end of the year. So we do see fewer buyers, and I thought it was a remarkable result, that Melbourne result. In both Melbourne and Sydney, we had the highest number of properties actually sold under the hammer on a day, and also the highest value of properties sold by auction on a single day. So a real spectacular way to finish the market, and big numbers in the smaller capitals. Clearance rates were down a little in Brisbane and Canberra, but still very strong in Adelaide, which has been a real dark horse, that Adelaide market, over the last few months. And as you say, when we look at the bigger picture, we are looking at that two-pace property market at the moment. The big movers over the year, which have been Melbourne and Sydney, are predictably now easing in terms of prices growth. That's all about affordability. And that's something that we should be welcome, because it just shows the natural stabilisers are working in our housing markets, that affordability is sidelining some buyers. A lot of the pent-up demand is being released. But at the other end, we've got Adelaide and Brisbane is now the fastest growing housing market in the country, and they're going in the opposite direction. They're actually growing quite strongly. And in Brisbane's case, it is about migration, particularly, I believe, from southern states, in particular Melbourne, but also affordability advantages, because their prices are still well below Melbourne and Sydney, despite them having similar income. So there's still plenty of upside, I believe, to the Brisbane market. And Adelaide also has those affordability advantages and a growing economy too. So that's how we're ending the year, Michael. Very positive. I guess it was the year that was. But just quickly understanding that surge in auction numbers, we've got to focus on the fact that up until lockdowns in the middle of the year, every month this year has been a record month for auction volumes now in most of our capitals. Now, that reflects the pent-up demand being released from last year. When we got lockdowns in, and this, we're talking specifically Sydney and Melbourne, of course, lockdowns in the middle of this year, that again impeded that record flow of auction activity. So it's not just those record numbers that have been in every month except those lockdown months in the middle of the year. It's also that usual end of the year higher numbers of auction properties coming into the market. So that's what's added to the normal end of the year market, has been that release of pent-up demand from sellers. So we shouldn't really be surprised here that to the end of the year, we're getting these record numbers at the end of the year, because if we understand it clearly, those auction numbers reflect decisions that were made 6 weeks ago. And of course, 6 weeks ago, we came finally out of lockdowns in Melbourne and Sydney, plus the confirmation that lockdowns were hopefully a thing of the past going forward. And that's added to the usual end of the year surge in auctions. But the market's held up very well considering that. And those clearance rates were very healthy, I think, given the number of auctions that flooded markets on the weekend.
It's a great way to finish the year, but it's also a great lead into 2022 when, even though the markets won't grow as strongly, we both see growth happening all around Australia. The fundamentals are strong, consumer confidence is there, the economy is picking up, interest rates are going to remain low, more people are coming into Australia. I guess there's going to be a little blip in the middle of the year when there's going to be an election, and as normal, people are going to hold off. So I guess next year is going to give us lots of information to commentate about each week. But we'll be back again one last week for this year next week. Look forward to catching up with you then.
Yes, Michael, thank you.